All right, good evening and welcome to tonight's webinar on finding position trades. I'm Stockscores.com founder Tyler Bollhorn. I'm going to be your host for the next hour or so. What we're going to do tonight is go through the process that I use to identify position trades. A little bit of an itinerary. We'll start with an introduction of me and Stockscores. I'll explain what a position trade is. We'll talk about the Stockscores 3 rules, look at our tools of Stockscores.com, talk a little bit about strategies, and then the process for finding trades. For those that are new to the Stockscores education material, I'll talk a little bit about the components of the Stockscores approach and what's available to learn my approach to the market. And then finally, at the end of the night, we're going to actually scan the market in search of trading opportunities. So we will apply a couple scans. I will also invite you to ask me questions about specific stocks. I'll try to answer as many as I can. We usually get way more than I can handle, but I'll certainly try to answer some stock questions as well. If during the presentation tonight you have a question, just type it into the question box on the viewer that you are using, and I will answer them more toward the end. I may stop and pause throughout the presentation to answer a few questions, but I'll try to sort of put that in certain sections. Tonight's webinar is being recorded, and I will email out a link to a YouTube video version of it. So if you are not able to stay all the time, or if you find that there's a lot of information that you can't sort of take all in, then you do have something to back up to later on. Of course, if you want to ask questions and sort of see the real-time market scanning, well, then it's best to be in the live presentation because it's all going to happen real time. All right, let's get into tonight's presentation. So a little bit of an introduction on me. I live in Kelowna, Canada, which is in Western Canada on a lake. Beautiful spot. Moved here from Calgary where I grew up and basically came here for better weather. I've been trading for about 25 years. I started when I was 19 years old with about $3,000 in capital, and at one point I turned roughly $30,000 into $500,000 in about 3 months, and that really fostered my trading career. Because my approach to the market is fairly unique, I developed my own tools for doing that approach, and I'll be showing those tools tonight. So I don't do what everyone else does, perhaps that's why it works, and although there's certain things that are common amongst all trading approaches, I have my own unique secret sauce, I guess, if you will, and I'll try to share some of that with you tonight. I started teaching people my approach about 15 years ago, and every year I teach maybe 100 people how to trade my way, and we'll talk a little bit about that tonight as well. So let's begin with what is a position trade. Tonight's presentation is all about position trades, which are different than day trades or swing trades. A position trade is a longer term trade. The typical hold period on the short side is 2 weeks, but that would be pretty short. On the longer side, it would be more like 2 months, 3 months, sometimes even a couple of years. So it's generally a longer term hold, and the idea there is that it doesn't take as much time, both in terms of analysis and monitoring of your positions. So when you do the analysis like we're going to do tonight, it might take 15 minutes once you've learned how to do it. Now, when you first start, you probably spend more time than that, but once you get good at it, the actual process to research the entire market takes 10 or 15 minutes, and we're going to do that together tonight. And then to monitor the holdings, the stocks that you own, is a couple minutes either a week or a day, depending on which strategy you are applying. Now, I've got some strategies that you apply on a daily basis. You don't have to do it every day, but if you do it every day, then you can potentially find trading opportunities every day. And then I have another strategy where you only have to do that work once a week. So it really comes down to what is your ability to commit time to managing your money. And if you don't want to be married to the market and follow the market very closely at all, then you probably want to focus in on the weekly strategy where on a Saturday you're going to spend 15 or 20 minutes doing your research to manage your portfolio. Again, the shorter the amount of time you spend, generally the longer the hold period. So if you're doing just 15 minutes a week, well then you're probably going to be holding stocks for months, maybe even years, but typically 6 to 12 months. If you're doing your work every day, 15 minutes a day, then your hold period was going to be in that 2 weeks to 2 or 3 months time frame. If you want to be a day trader, well then that's all day, If you want to be a swing trader, it's an hour or two a day. This presentation tonight is on position trading, but I do have a swing trading and day trading presentation coming up next Thursday, which you can register for as well. And that'll actually be done during market hours where you can see what I'm doing during the trading day. All right, so moving along. Now I'm just getting over a cold, so if my voice sounds a bit hoarse or if I have to pause for a minute to cough or something, I'll beg your forgiveness. So this is a position trade. This is the kind of stock that we like to find as position trades. It has been in an upward trend for 4 or 5 months and has been really beating the market for that time period. And there's some special indicators that I use to help me find these kind of stocks. They're called the Stockscores indicators. I'll explain them in a moment. And there's also the chart that I use. So I've got here basically a 8-month price chart of this stock. This is a stock listed on the TSX Venture Market, which has been a real strong performer. So we need charts, we need indicators, we need tools, and that's some of the things I'm going to show you. What I'm going to start with tonight are the Stockscores 3 rules. These are really only meant for position trading. So if you are a day trader or a swing trader, you would not use these rules. They are designed for position trading. And on the Stockscores website, we have 2 scores. One is called the Sentiment Stock Score, and the other is called the Signal Stock Score. The Sentiment Stock Score is a gauge of whether investors are generally optimistic or pessimistic about the stock or market. The Signal Stock Score is looking for abnormal events in the trading action of the stock. And so what we really want are stocks that the market likes, that they're optimistic about, and then we're looking for trigger points, signals from the market that there is something going on. So that really derives our first 2 indicators, the Sentiment Stock Score being above 60 and the Signal Stock Score being above 80. Now in the Getting Started area of the Stockscores website, in the education area, there is a video that explains specifically how the stock scores are derived. And if you want more information on the stock scores, I would encourage you to watch that short video. I'll give you the general idea, and that is that every stock in our model world, which is basically every North American stock, is given 50 points to begin. And if they have things that are good in our algorithm, then they earn more points. If they have things that are negative in our algorithm, then they lose points. And we compile those scores to come up with the Signal Stock Score, and then the Sentiment Stock Score is an exponential moving average of that. Now, I want to stress, it is not enough to say I'm going to buy a stock because it has a Sentiment Stock Score above 60 or a Signal Stock Score above 80. Those are kind of the first 2 filters, but ultimately what we want is a predictive chart pattern. And so these things help us to find predictive chart patterns. And I'll show you a couple patterns tonight, but never simply buy a stock because the stock score is good. It's good, then you want to look into it further to determine whether it has that right kind of chart pattern. I designed the stock score so that I could get a computer to look for chart patterns. That's really what they're for. And so the Stockscores market scan tool, which I'll be showing you tonight, looks for the stocks with good scores so that we can then analyze the charts to see if they have good patterns. All right, so here is an example of how our 3 rules came together. I think I used these examples in another webinar recently, and I'm just sort of keeping with the same theme here. So first of all, you can see the green line, which is the Sentiment Stock Score, is above 60. That's point number 1. The blue line, which is the Signal Stock Score, spiked up there above 80, and it also had a predictive chart pattern. This is a chart pattern called an ascending triangle. You can see that there was other times when the Signal line was above 60 and the Sentiment line was above 80. There's a few times in the last, there's I guess 4 times there in that chart, maybe 5. However, the only time that it had all 3, which was a good Sentiment Stock Score, a good Signal Stock Score, and a break from a predictive chart pattern, was on this day right here. You can see that when that happened, the stock went into a very good upward trend. If we use this example, we had our sentiment line above 60, that's point number 1. We had the signal line above 80, that's point number 2. And then finally we had a break again from a predictive chart pattern, that was point number 3. And that started that stock on a market-beating trend where the stock moved from 50, 60 cents to over $1.50. All right, so that's the kind of things we're trying to find. We're trying to find stocks that are moving faster than the market, that are real money makers. I'm not interested in buying a stock that earns what the market earns. Because if I'm going to have that kind of an approach to the market, I may as well just buy an exchange-traded fund that represents the market. If I want to beat the market, I have to find what are called alpha stocks. Alpha stocks are those that are trading on their own story. A company that has exciting changes in fundamentals that attract investor interest and make people want to pay more for them. And if we can catch them early in the trend, like there, and ride them up, we can sell to the public up here when the public catches on. These people buying down here are the most well-informed investors following the company the closest. They're the smart investors. And the people buying up here are the ones that are chasing the stock higher, and that's not something we want to do. We want to be in early and sell to the public later. Another way to put it is we want to buy wholesale down here and sell retail up here. So to help us do that, we need some tools. There are 15,000 stocks traded in North America, and it's pretty time consuming to look through one chart after another looking for stocks that have predictive chart patterns. And so what we created on the Stockscores website is a tool called the Market Scan. The Market Scan allows me to filter the entire market looking for stocks that meet any one of 40 or 50 different criteria. And once we've done a market scan, we can then view the results of that scan in a charting application. And if we like the stock and its potential, then we're going to use a risk calculator to figure out our position size. So what I'm going to do now is show you those tools. I'm going to go to the market scan. I've logged into Stockscores already, and I've clicked on the tool menu and selected market scan, and it takes me into the market scan tool. Now I'm going to actually do scans at the end of the evening tonight. Right now I just want to give you an overview of the tool, so we won't go into the details of what we do just yet. Excuse me. So with the market scan, I can select one of my strategies. So let's say I'm looking for a position trade. I might run the Stockscores Simple Canada scan, and I'm going to run the report. It went through every stock that trades in Canada, found 17 that meet the criteria. I then view those in a chart slideshow, and I can just now cycle through the charts looking for the stocks that have the predictive chart patterns that I look for. And this is what we're going to do at the end tonight. So I'm not going to give you any answers just yet. You're going to have to hang around a little bit and see what this looks like. But we're going to actually try to pick some stocks and evaluate some stocks based on this process. Now, I did one on the Canadian market. We could also do it on the US market. So I can go back to the market scan and select the Stockscores Simple US, run the report. And if I wanted to look through these 100 stocks more quickly, I could say select all, but instead of viewing in a slideshow, I can view in a gallery, and that allows me to look at 10 charts per page, really speeding up the process. And once you get good at looking at these charts for the right kind of chart pattern, you will say, hey, that's a good looking pattern, blow it up, analyze it, and if you like that stock, then you start doing your risk management. So I can minimize that chart. I can go into the tools menu again, select risk calculator, and say I'm going to buy the stock at $1.80. My stop loss is going to be at $1.55. I don't want to risk more than 1% of, going to do percentage of my account. Let's say I don't want to risk more than 1% of a $100,000 account. I have a commission of $10. Click on submit, and it tells me that based on the risk profile of that trade, I can afford to buy 360 shares. So that's another great tool that is all part of the advanced package on Stockscores. As I said, we're going to come back and we're going to actually do this together at the end of the presentation. But first, I want to talk a little bit about strategies. So for position trading, I have 4 key strategies: the Stockscores Simple, bottom fishing, abnormal action, and pullback plays. And they're really looking for different things in the chart. And these are strategies that I've developed over the last 25 years. I've spent hundreds, if not thousands of hours fine-tuning these models, looking for the best combination of indicators and characteristics of charts to really come up with something that is predictive. And over time, I have fine-tuned these strategies to get to the point where they work pretty well at finding some strong stocks. So the Stockscores simple strategy is for the person who probably does most of their research work in the evening. You can do it during the trading day if you want, but I designed it for people that want to analyze the market in the evenings or on the weekends. If you're going to do it every day, you're going to run the daily version of it. If you're going to do it on the weekends, you're going to run the weekly version. And it's really about looking for stocks that have good stock scores, indicators, and predictive chart patterns. The bottom fishing strategy is one that we use when a market or sector is coming out of a downward trend. So for example, the energy sector has really been beat up since last summer, and it's starting to bottom and starting to show some optimism again. So now is a good time to apply the bottom fishing strategy to the energy stocks. The abnormal action strategy is one that looks for stocks behaving abnormally. I have found that most market-beating stocks will start their market-beating upward trend with abnormal behavior. By abnormal behavior, I mean stocks that are trading with a bigger price gain and abnormal volume, very strong volume on a particular day. Those are strong signals that something is going on. And when you take that abnormal activity and combine it with, again, the right kind of chart pattern, you can find those stocks that really have the potential to make big moves in a short amount of time. So one of the examples that I showed you, the GMAN, this one, fit the criteria of the abnormal action strategy at point number 3 there. And that's how you could have found that particular strategy. And then we have another strategy called pullback plays, which is the one strategy we use to buy stocks that are already in upward trends, but buy them when they are on sale. So using the pullback play strategy, and I'll erase some of the scribble marks that I've got on here, we would buy this stock here, buy it here, buy it here, buy it here, and buy it here. It's a little bit more of a shorter term trading strategy, also here. Anytime a stock is basically in a good upward trend but has weakness in that upward trend, I have a set of criteria that allow me to jump on board that stock in a way that I can then enjoy the rest of the upward trend. Now, as I said, we're going to do some of these strategy scans at the end of tonight's presentation. What I want to do now is kind of give you an overview, a sense of how all these things connect. Now, within a trading approach, you need a number of different things. First of all, you need a strategy. Now, some people's strategy is to buy stocks on tips. Some people's strategy is to buy stocks based on what experts are saying on television. Some people will buy stocks based on the earnings multiple of the stock. I'm a technical trader. I look for stocks meeting the requirements of my algorithms. So I've come up with indicators and combinations of things that I've developed and also common things in the world of technical analysis, and that is how I generate my trading ideas. Most of the work that I do is done by a computer, and then I do the final filtering, the final selection, using some skills that I've developed and skills that really I can teach you, and that's where the chart reading skill, point number 2, comes in. I let the computer, as I said, do 80, 90% of the work, but the final decision is based on my interpretation of the chart, and that is a skill that takes some time and knowledge to really apply properly. We also need process. We need a step-by-step process to know what to do and when. It's not enough to say, I'm going to buy stocks that are breaking from ascending triangles, but what is the process that you are going to do to find those stocks on time, not find them a month too late, not find them after everybody already knows about it, but find them early in the trend. And the process really ultimately requires some tools. So I've developed the tools of Stockscores to help me do that. I built those tools about 15 years ago. Prior to using those tools, I had processes in place, but they were way more time consuming. I would spend hours and hours doing the work that I can now do in 5 minutes. And it really is that market scan tool on Stockscores that allows me to save a lot of time and not miss out on opportunities. Now, I've spent hundreds of thousands of dollars building these tools. I make them available to users of Stockscores.com at a pretty low price of $29 a month or $300 a year. But in order to use those tools effectively, you need to have the skill, and that's where our education comes in. I'll talk about that in a moment. One of the things that you have to bring to the equation is the emotional control and discipline. Everyone has an emotional attachment to money, and that causes most people to fail in the market because they make the mistakes of a normal human being. Most people don't like to lose money and like to make money. What that means is that in their trading, they will tend to hang on to their losers and sell their winners too early. And my job as a teacher is to not only highlight that, but also give you some methods to control those emotions and maintain your discipline. We do that by having a good trading plan, which I can help you write, and also by having a risk tolerance that you understand and you do not exceed. If you're not comfortable with the risks you take in the market, I guarantee you, you will make emotional mistakes, and ultimately those emotional mistakes will cost you money. It's ironic, but it's the fear of losing money that makes a lot of people lose money. And you have to be able to manage that fear so that you can make good, rational decisions. Finally, the last thing you need is capital. And really, as a trader, my number one priority is capital preservation. If you go into the market with $25,000 and lose half of it in the first 3 months of your trading career, you know, you've dwindled your capital, and not only have you hurt yourself financially, but you've also dwindled your emotional capital. You're going to be frustrated, depressed, that sort of thing. And it's real important to not have that happen. So when I teach people how to trade, I have a process where we paper trade for a while, get our confidence, get our skill level up, and then take very little risk to begin with. As you gain success, you take on more risk until you're ultimately at the point where you're using all of your capital, but in a responsible way so that you can preserve that capital and really protect it. And those are all important components of the trading approach. Now, how we do that in Stockscores, if you want to learn my approach, it's basically 3 steps. Step 1 is learn the basics. So tonight's webinar will be considered a basic step. And a lot of my basics are covered in the book that came out last year called The Mindless Investor. That's something you can buy at Stockscores.com. There's a little link on the homepage to Stockscores.com to either buy the electronic version of the book or the hardcover. Once you've kind of understood that, then you're ready to start learning the foundation. I'm going to show you the foundation in a moment. The foundation are the core skills that you use to understand how the market works, how my approach works, how to read chart patterns, how to do risk management, that sort of thing. Again, I'll show you this in just a moment. Once you have the foundation understood, you're ready to start learning my strategies. I have position trading strategies, which is in the investor course material. So this package right here focuses on position trading. For those that want to day and swing trade the market, we have the active trader material, and again, it's just a separate set of strategies that are based on the foundation, but really just a different set of rules. So all of that is taught on the Stockscores website in the Stockscores Education Center. I'm going to jump back to the Stockscores website now, go into the education area, and here you can see that we have all of these modules online. Many of you are already members of Stockscores. You'll be familiar with this, but for those that are new to Stockscores tonight, I just want to give you a quick tour of how this works. Now remember I said that there was a video that explained how the Stockscores indicators work. Well, that is right here in the Getting Started area. So here you can see a title called the Stockscores Indicators, and if I click on the little video icon, it's going to start playing a video that talks about how the Stockscores indicators are derived and what they are based on, how you use them, that sort of thing. So that's all explained in that video. Now I'm going to minimize this again, jump back to the Education Center. We're going to close off the Getting Started area and move into the Foundation area. The Foundation is really the core skills to trade my approach. You want to learn how to read chart patterns. That's a real important aspect of what I do. Well, you have to understand the 6 elements of chart patterns first. There is a written lesson that explains that. We actually did a webinar on this last week. Once you've understood the written lesson, you can watch a video. And again, it's all right here in the Education Center. You can watch this from your telephone. If you have a smartphone, watch it from your iPad, your computer. Once you've done the video and the written lesson, you're ready to do the assignment, which tests your understanding of the topics discussed in that module. And then finally, there is a multiple choice test to determine whether you really understood the theory in that thing. So you do your multiple choice test and you get your answer out of 10. Once you've done that, you move on to the next module. And it's all very modular. Basically, you work from the top down to the bottom in these, learning all of these skills so that you can prepare yourself for the investor course material. Now, each of these lessons is anywhere from 45 minutes down to maybe 10, 15 minutes. So some of them are quite short. Some of the first ones are the longer ones where you're learning how to read chart patterns. So it doesn't take a ton of time. You know, I've had people go through everything in a day, but I would say that that's a busy day. You probably want to give yourself, you know, an hour here, an hour there, and be done it all in a couple of weeks. It's really up to the individual, but it's very modular, so as you work through it, you're always getting a score here. You can go back and view things as many times as you want. You can redo assignments. There is a video that explains the answer to the assignment, so it's very independent, but also something that you can repeat. You can come back here 2 years from now and look at all that material, assuming you are a subscriber to that material. Now finally we have the strategies. So tonight we're going to use the Stockscores Simple strategy. We have 2 versions of that, the daily and the weekly, and there's a written lesson that explains it as well as a video. And these are really the rules for when to buy, when to sell, how to manage risk, how to manage emotion, and the process for finding them. If you have an interest in being an active trader, there's material in there for you as well. Tonight's presentation isn't focused on active trading, so I'm not going to get into that tonight. Tonight we're going to look at the investor strategies. We're going to do a few market scans together and try to find some opportunities using those strategies. We won't do all of them, but we'll do a couple. All right, as I said, each lesson in the Education Center in the foundation area has a written component, a video component, an assignment, and a test. For the actual strategies, it's a written component and a video. Now the pricing of this stuff is as follows. If you do the foundation course, you're looking at $995. It's all payable online. It's very automated. You can sign up at any time. There is some incentive to sign up before May 15th. I'll talk about that in a moment. But you can sign up for the foundation course at any time, $995. You could then upgrade to the investor course later on for $1,745. However, if you know that you want to do the investor course, you want to learn the investor strategies, do that right away, and you're going to get the foundation included. If you understand that you want to be a day trader or a swing trader, then do the active trader course, focus on those strategies, but that is also going to give you access to the investor strategies and of course to the foundation. So basically if you're at the highest level, you get everything below. If you're at the investor level, you get everything at the lower, like the foundation area and that sort of thing. You can upgrade at any time. You basically pay the cost difference plus $250. So that's how we derive the upgrade pricing. If you go into Stockscores tonight and go to the education area, log into Stockscores, it'll tell you the pricing. So if you've already purchased the foundation, you want to upgrade to the investor, the pricing will show there. It's showing for me as purchase because I have access to all of this material already. Now, there is some bonuses for people in Canada who want to have a discount on this material and want to trade through Desjardins online brokerage. Desjardins is a large credit union in Canada, the 6th largest financial institution in Canada. We're going to have someone from Desjardins come on just in a moment to just give some highlights of what Desjardins does. They're my broker. I've used them for 7 or 8 years as my broker, and they subsidize the education. So if you have an account with them, they're going to subsidize it. They basically pay me to give you education at a discounted price. So you can get the foundation course for free if you are with Desjardins Online Brokerage. You can get the investor course for $1,000 instead of $2,495, saving you $1,495. You can get the active trader course for $2,000, saving you $1,495 over the active trader price. Again, you just have to trade through them. You just have to be their brokerage client. Plus, you're also going to save yourself the annual fee or the monthly fee to use the tool. So instead of having to pay $29 a month to use the market scan tool, you can get that for free. So real good incentives to trade with Desjardins, but having said that, I wouldn't have a partnership with them if I didn't believe in them. So I'm going to get Daniel on just for 2 minutes to explain Desjardins and what they offer. Daniel, I just got to unmute your mic here and let me know if you're here. Are you there, Daniel? Not hearing Daniel.
I'm here. Can you hear me?
Oh, there he is. Okay, great. Daniel, why don't you fire away with yes, I can hear you great.
Oh,
Go ahead.
perfect. Okay, perfect. Thank you, Tyler. So first, I would like to thank all the attendees for joining us for the webinar tonight. And Desjardins Online Brokerage is committed to providing our clients with the most powerful tools and best educational events to help give you an edge in the stock market. So there's a few points why you should choose us and consider us as your brokerage. Well, first point is Desjardins is safe. Like Tyler has mentioned, we are the 6th largest financial institution in Canada, and we were recently rated in a Bloomberg Market Report as the 2nd safest bank in the world. If you want to read the article, Google Desjardins safest bank, and you will find it in a Canadian business article. So to put that in Canadian perspective, TD is mentioned in the article as 5th in North America, but didn't even crack the top 20 globally. And this is very important to you. With past events like the financial crisis, when we saw several large institutions go insolvent, it can help you sleep better knowing that the financial firm you do business is rated very safe. And we are a member of the CIPF Canadian Investor Protection Fund. Second point is we're #1 in customer satisfaction. This then has been awarded #1 in customer satisfaction in the J.D. Power and Associates survey 5 times. #1 5 times. 4 times out of the last 5 years. And we promise to bring you great customer service and experience, and we will always be there for you from opening and transferring your account to support using our platforms or tools. And we're reliable and very cost effective. We are the first discount brokerage in Canada and have been in business for over 30 years. This experience translates to a reliable platform you can count on. We offer real-time streaming quotes and fast execution. And we're a direct access brokerage, which means that your trades hits the market in 1/10 of a second. Most other bank-owned online brokerages use straight-through processing, which basically equates to you sending an email to their trading desk. Also, most direct access brokerages charge something called ECN, electronic communication fees, which we do not. Active traders can trade for as low as $5, but even if you're not an active trader, everyone can enjoy $9.95 flat fee for equity trades. And we have very competitive margin rates for those who trade with leverage and offer 3-to-1 buying power for experienced traders. And we have very powerful tools in education. At ThisNet, we know how hard it is to consistently beat the market and manage your account, so we are committed to bring you powerful tools. We offer tools like the Stockscores Market Scanner, as well as a Stockscores Station to our clients, a substantial discount for Stockscores members looking to upgrade their knowledge and take their trading to the next level. So I would encourage you to visit our website, www.thisnet.com, to get more information and sign up for a free demo of any of our platforms. If you have any questions, please feel free to contact me anytime. You can reach me with the information on the screen that Tyler will post soon in the webinar. Thank you.
Thanks, Daniel. And just a little added incentive, anyone that opens an account with Desjardins, or at least gets the process begun or started before May 15th, will get 3 months of my daily newsletter. So that's about $150 value. And that's open to anyone that opens or gets the process started with opening an account. There is the contact information for Daniel. What I find that is so much easier is if I just put up a little poll here, and the poll's basically if you want Daniel to send you an email tomorrow with some information about Desjardins, you can just answer in the affirmative to this. If you don't want Daniel to contact you, then just say no, and they'll just fire you an email with some of the details of the offer from Desjardins, and they don't hunt you down or bug you too much. I know it says there, would you like Wayne to contact you? Wayne and Daniel work in the same office, so it'll either be Daniel or Wayne who contacts you. And I'll just leave this up for another moment if you just want to answer yes or no to that question, and then we will move along. We're just about ready to start doing some market scanning and looking at some individual stocks. I'll just leave this up for a moment though. In the meantime, I've had a couple questions come in, and some of them I'm going to just hold off on until we actually start looking at some charts. But so one question is the webinar available on a disk? It is not available on a disk, but I will be emailing a link to the video, which is hosted on YouTube after the webinar. So probably tomorrow, maybe later tonight. It takes a little while to compile the video, but once that video is compiled and uploaded, you will get an email as long as you are registered for tonight's event with a proper email address. You'll get that emailed to you. Do I do fundamental and technical searches? I really don't. I'm more of a technical trader, so my strategies are based on technical indicators, my own indicators in many cases. And I think that's about it for now. So we're going to do some stock questions in just a moment. I'm going to shut down this poll here. Bear with me. I'm just having trouble closing it off. There we go. All right. So let's just talk quickly about the upcoming training that I have in May. So a few times a year, I do some live online training. So if you wanted to, you could take my class entirely from the Education Center. It's all the information is there. But this May, I'm going to complement that with some bonus live training. We're going to do some live webinars like this where we have lots of question and answer, much more in depth than tonight's presentation, but same kind of style. And basically on Saturday, May 23rd, we'll do a 3-hour overview of the foundation material. I'll kind of show you how it all relates together. And then for those that have registered for the investor course, on Monday, May 25th till Thursday, May 28th, so 4 nights in a row, we're going to do market scanning, kind of like what we're going to do tonight, except I'm actually going to explain it in a lot more detail because you will have already had time to learn the rules of my strategies. So we'll take about an hour each night to scan the market together, practice reading charts, do risk calculations together, and really pick out some stocks that I think have good potential to go higher. So anyone that is invested in the investor course, who is registered for the investor course, will be able to access that bonus live training as well. And for those of you that do have an interest in swing trading or day trading and register for the active trader course, those same 4 days, we're going to actually trade the market for the first 2, maybe 3 hours of the trading day together. Most of the trading opportunities come in the first couple hours of the trading day. So starting at market open, you're going to be able to see my screen on your screen, and I'm going to actually walk you through the processes that I use to find day trades, and I'll show you what I'm buying, show you what I'm selling live as I do it. So it's a real great educational thing. Lots of people just do the trades I'm doing as well. You never know, maybe you'll be able to pay for the course in those 4 days. All right, so if you want to take advantage of those May training bonuses, anyone who registers for the Active Trader course or the Investor course before or by May 15th, you'll get all that live online training for free. After May 15th, it is going to be $495 extra. So that's another little bonus that you may want to take advantage of. And if you have any interest in this upcoming course, either the Active Trader, the Investor course, I got a little poll here that I'm going to put up for 2 minutes, and you can just let me know if you'd like to receive an email about that. That email will come to you either tonight or tomorrow, and it'll just have some basic information about the upcoming course. If you've already replied yes or no to this, the email is the same as you did in the past. I've been asking this question in past webinars, so if you answered yes or no to this at last week's webinar, for example, you'll have already received this email, but I'm happy to send it to anyone that hasn't joined us in the past or would like me to give a little more detail on that May training and the more detail on what the investor course is all about, more detail on what the active trader course is all about. Just let me know by answering this poll. Just going to leave that up for a minute, and then we're going to start doing some market scanning. So while that's going, if you have a question about an individual stock that you want me to look at, you can post that symbol now. Please give me the symbol and let me know if you're looking at it as a longer term trade, as a day trade, because the answers can be very different. So if it's a position trade, say Suncor as a position, or don't say Suncor, say T.SU as a position trade, or Netflix as a day trade today. I'm happy to do a little bit of analysis. I won't be able to do everyone's because we have a lot of people in here again tonight, and I tend to get a lot of these questions, but I'll try my best to get as many in as I can. But before we do that, we're actually going to scan the market together. So let me just close off this poll. Hopefully everyone's had a chance to answer. I'll close this off, and let's do some market scanning. After we do the market scanning, we will look at some individual stocks. So I'm going into the market scan tool, and I am going to use the Stockscores Simple Canada scan first. So we're going to select that scan, and we're going to run the process. Now, I'm not going to teach you the rules of that tonight. That's reserved for the investor course, but I am going to apply the rules and try to find some stocks that I think have good potential. So here's one. Cloud Resources, been going up for 2 or 3 months. It started its uptrend back here. It fit all of our criteria back then. It had above 60, above 80, a predictive chart pattern with a breakout right there. That was at 40 cents. Today it's a good hold, but it's not a stock that I would buy today. I wouldn't want to chase this one higher. So I would sort of say, it's a good hold, but I'm not going to buy it. I'll keep on moving. Here's another one. This was actually my examples in the presentation tonight. It's just continued to move higher. It's now going parabolic. What that means is that the trend is getting steeper and steeper over time, and that's a good sign that it's nearing its top. So you want to be pretty cautious with stocks like this and not chase them higher. It remains a hold. If you own this stock, good for you, but I wouldn't want to buy it up here because parabolic trends usually end with fairly sharp corrections. So you want to, if you own that stock, dance close to the exit door. So this one I like. I wouldn't say it's outstanding. I would rate it a 7 out of 10, maybe a 6.5 out of 10. It's got optimism, which is one of the things I like to see. It's breaking through a upper threshold of value, what we call resistance. We talked about that in last week's webinar. Abnormal price action today, which is good. The volume traded today wasn't exceptionally abnormal, and I'd like to see the volume to be a little bit stronger. So that's why I haven't given it a real high rating, but still a decent looking chart, one that looks more likely to go higher than lower. This one is pretty good as well, traded decent volume today. One of the weaknesses of this chart is that the stock was really strong in the morning and then kind of fell off at the end of the day and really failed to hold some of its strength at the end of the day. The volume was abnormal price action, so this would fit our abnormal action strategy as well. And again, I would rate this one, let me just take a look at the 3-year chart of this. I'd give this one a 7 out of 10 based on what I see today. So I can continue to go through, and I'm going to go through a little quicker now and just see if there's anything else that I really like. So far I've liked 2. This stock here, D3 Exploration, I'd give this one a 6.5, 7 out of 10. Pretty good looking chart, not outstanding, but looks decent as well. DTX is the symbol of that on the Toronto Exchange. Going on to the next one. Remember, this is all recorded in a video, so you'll be able to check these later on as well. This stock is a good hold, not a good buy here. It's gone parabolic, so it's getting a little too late. This one is also too late. Good hold though. I wouldn't buy this here, just a little too late. That one doesn't fit my criteria. You see I'm going through these charts pretty quickly. I'm looking for very specific things. Those things are taught in the strategy document. And once you learn how to read chart patterns and know what to look for, you will know that this stock gave an entry signal right here when it broke from a good chart pattern, breaking through resistance from low volatility, from optimism. It fit all the criteria at that point. Would I buy it today? No, it's a good hold. It was a buy back here. Now it's a good hold. You don't want to chase these things higher. So we've got a couple more to look through, and that's it. So let's do that same strategy, but let's do it on the U.S. market. And just so we don't have to look at too many stocks, let's also add in some filters. That's one of the nice things about this tool is you can add in filters based on things that you like to do. For example, you may want to only focus on stocks that pay dividends, so you could check that off. You may not only want dividends, but you may want to say they have to have a yield of at least 3%. All right, so you can add in that filter. I'm going to set my filter for this particular scan to look for stocks that have, I selected the wrong scan here. Let me just pick the right one. I was looking at the filters. I could see they weren't right. Stockscores Simple US. I'm going to select it so that I want stocks that are under $15 but over $1. You can add that in. We will run the scan, and it found 31 stocks. Now this time, instead of looking at them one at a time in the slideshow viewer, we're going to look at them in the gallery viewer, 10 per page. So this stock here, ENZN, I would rate a 6 out of 10. One of the problems with it is, although I think it's quite likely to go higher, it's going to run into some resistance at $1.80. And those that understand my risk management formula will know that this has got about 25 to 30 cents a share in risk, about 25 cents a share in risk. And therefore it needs 50 cents of upside. That would take it to $1.80, which is where resistance is. So it's a little borderline on the risk reward profile. Volume is very abnormal. Price action is abnormal. Those things are great. I'm just not totally loving the risk profile of the trade. This stock, BSPM, looks pretty good. It was real strong today. I actually watched it fairly closely today. I trade every day, and I was watching this one. One of the problems with it is it kind of fell off at the end of the day. Again, it was strong in the morning, and it really saw some selling pressure into the afternoon. So I'd give it a 6 out of 10. I'm going to cycle through these a little quicker. I like this one. This is Aveo Pharmaceuticals. This is a stock breaking from a pattern called a pennant pattern. I'm just going to take a look at the 3-year just to do a little bit more analysis on it. Okay, 3-year not great. I would rate this one I'd give it a 6 out of 10 as well. And the daily chart I would give almost an 8 out of 10. But when I look at that longer term time frame, which is an important step in my process, The 3-year has a lot of resistance to deal with. So I'd give it let's call it a 6.5 out of 10. Moving along, that one, don't love the risk profile of it. This one also, I think the bus has left the station. Our entry signal was back here, Coronado CNDO. This one looks interesting. These are warrants on Kinder Morgan. I'm not crazy about it. Earthlink, let's take a look at the 3-year on this. Earthlink is pretty good. What it's lacking is volume. It didn't trade real strong volume today. It's not bad. I'd give this one a 6.5 out of 10. If you're looking for yield, though, it's paying a 4.25% yield, so that's nice. So it's got the dividend payout, and it's got a chart that looks like it's more likely to go higher. So if you're looking for a more conservative income-paying stock, then maybe this one is worth considering. You want to check the yield, though. The yield number that we quote on Stockscores is historical. That doesn't mean the company will pay that in the future. That's something you have to sort of check on the investor relations area of the company website to make sure that that's expected to continue. So I'm just going to cycle through charts. Got a few more pages to go through here. I'm going to go through these pretty quickly just so we can actually pick some more. We've actually had a few stocks tonight. Some good ones on the Canadian market. The Canadian market has been a real underperformer for the last 6-8 months, but it's started to play catch up. The charts are getting better in Canada. Partly, I think, because the U.S. dollar is starting to show a little bit of weakness, and that could help the Canadian market. Certainly, it will help oil if that happens. And the mining names and those sort of things are very sensitive to the U.S. dollar, so that's something that's going on. All right, so I've just about finished going through all of these. This one looks pretty good. This is Tesco Corporation. I believe Tesco is an oil service company, and that is a good, what we call a bottom fishing chart pattern setup. It's got everything I like to see in a bottom fish. I'd rate that one a 7, maybe even 8 out of 10. Pays a small yield, 1.69% to own it, but it looks like it can make a little bit of a comeback. And many of the drilling companies, the oil service companies, have charts very similar to this. So that's been the area of the energy sector that's actually leading the energy stocks out of their doldrums, which they've been in for some time. All right, so that is the process for that particular strategy on those scans. Now there's other scans. If you wanted to do this kind of work on the weekend only, then you're just going to use a different scan. You're going to run the Stockscores Simple Weekly US. And different set of rules. You can actually choose a different chart time frame for this strategy, but that's what you're looking for with that one. I think it's time to start looking at some charts. I've had lots of people submit some here, so let me just catch up with all of the comments that have been posted. And again, I'm going to apologize in advance if I miss some of them, but let's take a look here. So I'm going to pull up ACPW. So this is a good strategy for the pullback play. One of the strategies in the market scan is called a pullback play, and this one fits that criteria. I'm just going to take a little longer term view of this. I don't think I would do this one, and the reason is that although I like the chart in the short-term time frame, it still is having some trouble with that longer-term downward trend. So I would say, if you're a real short-term trader, it's probably okay to consider, but longer term, it's going to be fighting some pessimism on that one. So you probably have to be in and out of it fairly quick. Let's take a look at Potash Corp. This is a stock to avoid. The tops are falling. That's a sign of pessimism. Sentiment stock score has fallen below 60. And so this upward trend line was broken in early March, and it's been suffering ever since. And so I would let it go and leave that one alone. Sierra Wireless, SW, is pretty good. It recently broke this little pullback downward trend here. Let's take a look at the 3-year. Yeah, I think that this one's okay. Looks like it may continue to overcome the selling pressure that we had here for 3 or 4 months. I actually like this one. I don't love it, but I would say it's a solid 6.5 out of 10. T.AGT. Looks like a bit of a parking lot, kind of been stuck in a trading range for a while. Pays a yield, 2% to own it, so it's not terrible. I think it's okay, but it's not something I would buy today. T.SLF. If you own it, though, I'd stick with it. It looks all right. SLF, something I wouldn't really want to jump into just yet. It doesn't have a good chart yet. That could change tomorrow, but as it is right now, I would call it a neutral chart, and so not something I would buy. Okay, T.KGI, Kirkland Gold. Kirkland Gold has been a surprising strong gold stock in a market where gold stocks really haven't done very well. I think if you own it, I would expect that it's going to get stuck here. Let me show you just the problem. It's rallied up to this resistance at $6. And notice every time it gets there, it gets stuck. It happened here, and it's happening here again. I think it may go sideways for a little bit, and if it can break through 6 after going sideways for a little bit, then it's worth considering. But right now, it's kind of stalling there. And I think you might just want to be patient and wait for that breakout. If you own it, no reason to sell it. It's got a nice upward trend that's about 3 months old, and that kind of momentum is positive, so we want to stick with it in that regard. Okay, let's try MRGE. If you're in MRGE, I would stick with it. I would not buy it here. It's risky. It's actually due for a pullback. It's getting a little bit extended to the upside, so you want to be a little bit careful there. T.CRH. Good hold, wouldn't buy it. Good hold though, T.PLI. Also a good hold, wouldn't buy it. SOL. I like this one. I was actually looking at this the other day. It gave a decent entry signal. I would call that a 7 out of 10 entry signal 3 days ago. A little bit of a choppy chart going into that, but not bad. I would still think it's worth considering here. Obviously, I would rather see you buy it at $1.80 than $1.95, but I think it's still worth considering. I'd give it a 7 out of 10. What do we got here? EWG. So EWG is a German ETF that is basically a basket of German stocks. It's a stock that I featured as a more conservative position trade, and I think it's a good hold. I don't see a reason to buy it right now, but it's up about 6.5% for the year. It's kind of a slow, steady, low risk type of trade and something worth considering. RHI is a stock that I would avoid right now. It looks more likely to go lower than higher. T.TRI. T.TRI is breaking an upward trend line today, so I'm a little bit concerned about that. Longer term, not bad. It looks to me like it's going to go into a pullback. I think, 3 months from now it could be higher, but 2 weeks from now I think it's lower. So if you're a more shorter term trader, I'd think about selling that one. T.BIN. Now, everything that I'm doing here, you notice I'm looking at these charts in just a second. I'm giving you an impression of it. Anyone can learn how to do this. You just have to study my 6 elements of chart patterns and understand them really well, and you'll be able to do this as well. This would be a hold. It should bounce off of 36, maybe 35.50 in the next couple of days. Pulling back from a high though, so it's not bad. I would consider this one a hold. I wouldn't buy it. NBG. This is to avoid. The sellers are in control. Look at the sentiment stock score, very weak. You want to avoid, for position trades anyways, stocks that have a sentiment stock score of less than 60. KDX, good hold. Wouldn't buy it here, but if you own it, I would stick with it. T.TEI. I would avoid this stock right now. It is still, the sellers are still in control. It is stabilizing, which is a positive step, but it's not there yet. V.BLO. B.BLO. Oh, doesn't look like that's the right symbol. HVU, which is an ETF based on the VIX. These things, by the way, any of these Horizons beta ETFs are for short-term trading only. Do not hold them for the long term because they decay in value over time. I use these for day trading, maybe holding for a few days, but beyond that, they're basically a disaster waiting to happen because they rebalance every day, and these ones are actually based on futures markets where there's a phenomenon that decays the value over time. So you only want to day and swing trade these, and this one I think right now is one to avoid. I'd love to trade this when the market is going through a correction, but that's not the case right now, so I would avoid that one. DDD. It's stabilizing, that's a positive, but I don't see a reason to buy it just yet. I think I would call it a neutral right now. Just looking at some more stuff here. JDST. I would avoid this. JDST is based on the junior gold miners, and they are not looking good. The JNUG is going to be very similar. I would stay away from these still. There'll come a day when these are great, but right now I would stay away from them. And this one, Husky Energy, it's getting better. I don't think it's time to buy it just yet. Keep an eye on it though. SZYM, this is one of my feature stocks in my newsletter. I featured it about a month ago. It's having a real good week this week. I actually day traded it this week as well. It was a swing trade for me, or a position trade for me back here, and it's now up, I think, 35%. It's a hold. I would not buy it here, but it still remains a hold. Probably due for a pullback. If we look at a short-term chart of it, you can see it's just been marching straight up the last 3 days. And typically when that happens, you usually get a little bit of a pullback, but no reason to sell it yet. I would just kind of watch it closely. T.SGY. Oh, sorry, I typed that in wrong. T.SGY, which is Surge Energy. I'm just having to retype my, let me try this again. T.SGY. There we go. I think this was a decent buy yesterday, and it hasn't really gone up much today, so it's still valid. You know, there's been probably 10 to 20 energy stocks with very similar charts to this one. And the thing is, you had 10 or 20 buy signals on these yesterday. However, I would want you to only buy one, maybe two of them, because they're all going to move together. And if you buy a whole bunch of them, you're basically putting too much risk into one sector. And so, you know, Gibson's is another one, T.GEI. Has a very similar chart. There you can see a similar chart to Surge Energy. So there's lots of charts that look like this, but again, pick one or two, don't buy a whole bunch of them. I'm not convinced that we're in a long-term reversal of the downward trend for oil yet. It's, you know, you can dip your toe in the water, but don't jump in full capital. Molycorp's been a great day trader the last 2 days, and it gave back some of the gains today. I wouldn't position trade this. As a day trade, it was great yesterday. Had a nice little follow through from an entry signal on one of my strategies yesterday morning. But it hit resistance this morning at $1.10 and it got stuck there. And I would still be pretty cautious with this for anything more than a very short-term trade. T.CNQ. I would say neutral rating on this one. It's certainly better than it was a month ago, but I still don't love it. T.ARE. Now I know that there's some specific questions, not just stocks. I'll get to those in a minute. We're going to do just a few more stocks and then I'll try to answer some questions. This is a stock to hold if you own it. I wouldn't buy it. BMO. I would avoid Bank of Montreal. Key. I would avoid this stock. GXE. I'm trying to go through these as fast as I can so I can get lots of them in because I got so many to answer. GXE. GXE is pretty good. Very similar to Surge Energy, so this is another candidate to consider if you want to own one or two energy stocks. This would be one to consider. TWOU. Good hold. Wouldn't buy it here, but a good hold. T.ENC. Can't find that one. Let's try T.COS. Canadian Oil Sands. Not as good as Surge or Gear, but pretty good. I think trying to make a turnaround. More likely to see profit taking in the short term before it goes higher though. All right, so I'm going to stop with the questions. I hope I got yours in. I tried to do my best to get as many as I could. I'm going to try to just answer some general questions. Do you have buy signals that show up, or do we need to rely on chart reading skills from your courses? So it's the latter. I don't put little signals on here to say this is time to buy. There is a human judgment element. It's not hard. It takes some practice, but basically you go into the education area, you study the 6 elements of chart patterns and predictive chart patterns, those 2 modules, you're going to know what to look for in charts. And then we combine that with what's in the investor and active trader bundles to be able to inspect charts and in 1 or 2 seconds know whether they're good or not. Do I have a stock newsletter? Yes, I do. You can go to tradescores.com, and you can sign up for my daily newsletter where I have stock alerts as well. Where can you find my book on my website? Go to the home page. Go down right here, Mindless Investor, just halfway down the page. Click on that. You can actually read chapter 1 right on the website, and you can order it here. You can either do the electronic version or the hardcover version. And if you do the electronic version, it'll be emailed to you immediately. If you want to buy the hardcover, we will send it to you tomorrow. I think I probably missed some questions. I've just got such a long list here, and it's a little bit hard for me to. So what if I learned to trade with your indicators and one way or another I cannot access them anymore? The only way is to use your web page. Yes, my indicators are only on my web page. Having said that, the Stockscores website has been around for 15 years. I would say financially healthy, so there's no plans of taking the website down, and I don't expect to go out of business anytime soon. So, 15 years on, we're still around, and I think that that's pretty good. There's been a lot of websites come and go, and a lot of education companies, believe me, come and go in the time that I've been doing it, and we're continue to be around because I think we offer a good service, and we have something that works. So I do what I teach every day. I'm primarily a day and swing trader, but I also apply my investor strategies for my newsletter, and I don't just talk about it. I do this stuff every day. I think I'm a pretty good teacher of it as well. So hopefully you've got something out of tonight's presentation. Now we do have quite a few more webinars. So if you go to the home page, you can see here a list of the upcoming webinars. If you click on the View All Webinars box right there, you'll see the full schedule, and you can register for as many as you want. Try to attend more. There's different topics. So as I said, my next webinar is on Thursday, and on Thursday I will be actually showing you what I do during the trading day. So that one's at 11 a.m. Pacific time, 2 p.m. Eastern time. And I'll show you the stocks that I found that day. I may be in some trades, probably will be in some trades at the time I do the presentation. And I'll kind of walk you through the process that I use to find my day trades using both Stockscores and some specialized software that I have. And if you have an interest in day and swing trading, that's a good one to take in. And you can see the rest of the presentations there, different titles. Some of them are repeats. So if you can't catch one, you can catch another. Every time I do a presentation, I try to answer some stock questions. So if I didn't get to your question tonight, my apologies, but I will hopefully be able to answer you in the future. Stockscores Trader Training, if you have any interest in that, hopefully you answered affirmative in the question that I sent out, but if not, you can go to this website page, stockscores.com/learn. It's www.stockscores.com/learn, and learn more about that. You can also just go to the home page on Stockscores and click right here, Learn to Trade with the Stockscores Approach. Click on that. It'll give you videos on the different courses that we offer, pricing, all that stuff is explained there. I also talk about mentorship, which I didn't talk about tonight. But if you're looking for a one-on-one mentor, I do that for a small number of people every year. That's another option. All right, so there's my contact information. If you're on Twitter, I recommend you follow me on Twitter. I put out some comments on the market and general trading concepts on Twitter. Just look me up as Stockscores, at Stockscores on Twitter. There's our YouTube channel, and I've got hundreds of videos on YouTube that I've done. There's a new video every week, at least one, and tonight's video will be on YouTube as well. So I will email everyone the video of this presentation once it's all compiled and uploaded. I want to thank you all for coming. Again, I apologize if I didn't get to your questions on stocks, but I have run out of time, and hopefully we'll see you at a future webinar. Have a great night, and I'd like to say, trade well.